Good day, future accountants. For today, we will discuss financial planning and budgeting. But before we proceed to the topic, let's talk about first what is business planning. Business planning serves as a starting point of everything in a business, in the sense that without a plan, the business won't have a guide to follow. Just like us as a student, if we don't plan things in our studies, there would be a tendency that we won't be able to meet our goals. Now, let's proceed to our main topic and define financial planning and budgeting. Money and time are common resources to all individuals and organizations. For it to be used effectively, it requires planning. Planning alone, however, is not enough. Budgeting is also necessary to make sure that the plans are actually carried out. A budget is a plan showing the company's goal and how management intends to use these resources and attain those objectives. Why do we need to study financial planning and budgeting? Planning always involves budgeting so that the company uses the resources properly and expects to receive a good return after spending their money for business. A company who always plans makes a better decision in the future. A company who does not plan for the future project will lead to financial loss or error due to an unprepared situation that can lead to bankruptcy, and businesses won't like to declare bankruptcy on their side. That is why it is very important to always plan and budget the financial assets of the company. Here are the other benefits of planning and budgeting. Businesses can better coordinate their activities. Managers become aware of other managers' plans. Employees become more cost-conscious and try to conserve resources. The company reviews its organization plan and changes it when necessary. And lastly, managers foster a vision that otherwise may not be developed. So now, what is master budget? It is a comprehensive budget document that shows the budgeted or forecasted various statements such as budgeted income statement and budgeted balance sheet. This is often prepared on a monthly or quarterly basis and is used for business strategic planning. Master budget is composed of two major components, which includes operating budget and financial budget. So let's move on to operating budget. Operating budget is dedicated to the operation of the entity such as sales, production, and operating expenses. The following are the operating budgets of Padayan Company. This is their sales budget, their production budget, direct materials, direct labor, and overhead, selling and administrative expenses, ending finished goods inventory and cost of goods sold, and lastly, their budgeted income statement. Since this video lecture aims to explain financial budget, let's proceed to our main discussion. So moving on to the financial budget, it is a projection that shows how the business will have cash and how cash is used, or simply the inflows and outflows of cash. It is prepared to efficiently manage and control the cash flow of the business. A financial budget has three components, which are cash budget, budgeted balance sheet, and capital expenditure budget. Cash is the lifeblood of an organization. Thus, cash budget plays a very important role in the master's budget. Cash collection or cash receipts shows cash inflow expected to be received from customer sales. Cash disbursement record all the cash outlay for the period. Therefore, non-cash expenses such as depreciation expense is not part of cash disbursement. Cash excess and deficiency shows any borrowing or payment necessary to achieve a minimum desired cash amount. Let's take a look at the Padayan Company's cash budget that our group has prepared. Over here is the cash collection schedule with the following assumptions. Padayan Company anticipates that 1/4 of total sales are cash basis while the remaining are on credit. 24% of the credit sales are expected to be collected within the month of sale, having 5% for next month's collection. As of the last quarter of 2020, the accounts receivable amounted to 2,000 pesos to be collected in first quarter of 2021. Here is the cash collection schedule of the company. So let's take a look at it and let's learn how to solve for the amounts that will be reflected to the cash receipts of the cash budget. So first, the budgeted sales will be multiplied by 25%, which represents the cash basis sales. So in the lower part of the table, we can see there that Q4 of 2020, that's 2,000 based on the assumption 3. and the quarter 1, 2, 3, and 4 of 2021. We can get 14,250 by multiplying 15,000 pesos times 95%, because according to the assumption, 95% of the credit sales in that quarter will be collected in that quarter also, and the remaining 5% will be collected on the next quarter. So 14,250 for quarter 1. The 5% credit sales in quarter 1 will be collected in quarter 2, which is 750. And so on. We'll just repeat the process until we reach quarter 4. Let's total the amount, and that will result in quarter 1, we'll have 21,250. In quarter 2, 39,250. Quarter 3, 49,625. For quarter 4, 59,625. And in the year, we'll have a cash receipts of 169,750, which then be forwarded to the cash budget under cash receipt. Moving on to cash payments and accounts payable. Here are the assumptions of Padayon Company. All of the direct materials purchased are on credit, of which 90% is payable within the quarter of purchase and 10% on the next quarter. As of the last quarter of 2020, the company's credit purchases were 6,000 pesos, wherein only 10% is settled by the next quarter. So below, there is a table showing the schedule for cash payments of accounts payable of the company. On quarter 4, 2020, we'll only pay 600 pesos because that represents the 10% of 6,000 pesos. For quarter 1, the company had a 3,960 purchases, which 90% will be paid on quarter 1, amounting to 3,564, and 10% will be paid on quarter 2, which is 396. For quarter 2, they had a 660 purchases, which 90% will be paid on quarter 2, and quarter 3, 10%. And the process will repeat for quarter 3 and 4. However, for quarter 4, only the 90% will be recorded since the 10% will be paid on the first quarter of 2022. So the totals for quarter 1 is 4,164, for quarter 2, 6,336, for quarter 3, 7,842, for quarter 4, 8,304, and for the year, the company will have a 26,646 cash payments for their purchases, which these amounts will be carried forward to the cash budget under the cash disbursements. Here are the additional information about the cash budget of Padayon Company. A minimum ending cash balance of 3,000 pesos is required every quarter. Money can be borrowed and repaid in multiples of 1,500. Interest is 6% per year. All borrowing takes place at the beginning of a quarter and all repayment takes place at the end of the quarter. Budgeted depreciation is 1,300 pesos for overhead per quarter and 2,500 per quarter for selling and administrative expenses based on the company's overhead budget and selling and administrative expenses. In quarter 1, there will be a cash outlay for new equipment amounting to 6,500, and a corporate income tax amounted to 3,651 and will be paid at the end of 4th quarter. And 15,000 is the beginning cash balance of Padayon Company. Here is the Padayon Company's cash budget. For the beginning balance in quarter 1, as stated in the assumption, is 15,000 pesos. And we'll add the cash collections made for quarter 1, which is from the cash collection schedule we previously talked about or discussed, less the direct materials for the period, direct labor, manufacturing overhead, net of non-cash expenses, which is the depreciation expense amounting to 1,300 pesos, and the selling and administrative expenses, net also of non-cash expenses, which is the depreciation expense amounting to 2,500, and then the company had an income tax expense. It is based on the assumption that income taxes will be paid at the end of the quarter, and a cash outlay for equipment amounting to 6,500. It's on the first quarter, and total disbursements, that's just total the disbursements, and the result will then be subtracted to total cash balance. So 36,250 pesos subtracted by 33,774, the company will have a 2,476 cash excess. Since, according to assumption, the company must maintain 3,000 pesos cash balance per quarter, so we'll have a borrowing of 1,500. So 1,500 plus 2,476 is 3,976, and this amount will be carried to the quarter 2 as beginning balance. So repeat the process, just input the informations. These informations in the cash disbursements are found in the company's operating budget. You can go back to the slides where we presented the operating budget of Padayon Company. So here it is. For quarter 2, since the company is already capable of paying the borrowing, we'll pay it. That amounted to 1,500 with a 45 peso interest, since we only had it for 6 months and repaid it after. So for the year, the company have 31,423 pesos ending cash balance. So once cash budget is done, we can make the budgeted balance sheet. Padayon Company's equipment in 2020 amounted to 8,900 and retained earning balance of 7,850. The common stock in 2021 amounted to 38,750. As we can see in the table, the cash balance is the same with the ending cash balance in the cash budget. For accounts receivable, 2,250. This represents the 5% receivable in quarter 4 because this will be collected in the first quarter of 2022. Raw materials inventory, 1,380. Finished goods inventory, 5,500. Equipment of 15,400 because we had bought a new equipment in 2021 amounting to 6,500. So 6,500 plus 8,900 is 15,400. Total assets is 55,953. For accounts payable, 8,834. This represents the 10% payable in quarter 4 because this will be paid on the first quarter of 2022. Retained earnings, this is 7,850 plus the net income of 2021. So 55,953. And that is the company's budgeted balance sheet. So the last component of financial budget is the capital expenditures budget. Capital expenditure can be defined as the expenses incurred by the entity to sustain and keep the business growing. The difference between operating expenditure and capital expenditure is that capital expenditure have usefulness and help generate profit for a period more than the current tax year. So it is a long-term expenditure. So capital expenditure budget is a formal plan that shows how much and when the entity invests in long-term assets. Capital expenditure budget is also called the capital asset budget. And capital expenditure budget is an investment concept. And capital budgeting is usually used on the following decisions: replacement and acquisition of long-term assets, improvement of products, expansion of facilities, trading or exchanging assets. So for the company, Padayon Company, in the assumption C of cash budget was cash outlay for new equipment 6,500. So since it is acquisition, and there is no attributable cost stated, the amount of the net investment for equipment is 6,500. So that is all for this video lecture. I hope you are enlightened with the topic financial budget, and thank you so much for staying up with us until the end.